it took over 200 years, from the Coinage Act of 1792 until 2008, to go from no dollars in existence to 825 billion roughly, which is 0.8 trillion. So 0.8 trillion, that's from there to there. And then we doubled that and tripled it, and now we've quadrupled it, and this line is increasing at 85 billion every month. And so basically every month we're adding 10%, more than 10% of what the currency supply was in 2008. And so this is actually a hyperinflation of a very small portion of the currency supply. This is less than 10% of the currency supply, even with it way up here. It used to be like 2% of our currency supply. So this is hyperinflating at the same time that other sectors are sort of deflating. And one of the big things that's happening is that velocity of money is slowing down, velocity of currency. So the velocity is how many times a unit of currency is involved in a transaction in a year. So it's the average number of times that all units of a currency in a society are involved in transactions, so circulating. And when you increase the velocity, like we had here back from 90 to 2000, it has the same effect as increasing the currency supply. And then what I find is interesting is it was fairly stable, you know, sort of trapped in a range from 1960 until 1990, and then we have this big boom when we had the NASDAQ boom in the stock markets, and then since they peaked, 1999 or so, 2000, right here, we've just been headed down. So this it offsets the expansion of the currency supply in other sectors because velocity is slowing down. And this is something that the Federal Reserve can't control. They think that they're masters of the universe and that they can control this whole thing, and they'll be able to stabilize things and then exit their positions. Well, they can't. This is something that they're unable to control. So we have inflation and deflation. If you look at the shadow banking sector and some other credit aggregates, there's actually the currency supply in those sectors is shrinking, while the Federal Reserve is hyperinflating base money to offset it. So it sort of comes out to neutral. But it causes a bifurcation of society. It's making some people very, very rich, this expansion of base money, and while it's stealing from other people, from other sectors of society. This is the federal surplus or deficit. So it's measured in millions of dollars, and what I find really interesting here, this little dip here is the deficit for World War II. And then in '71, we went off of gold at the end of the Bretton Woods system, and right away, these deficits persist. With gold, they can't persist. When you have a boom in one country, when that country experiences a boom, it feels rich and it starts importing goods from another country. Gold flows out of the boom country into the country that's poorer and has lower wage rates, and so it cools off. The boom country experiences a deflation and cools off, while the poorer country starts to experience an inflation and they're starting to have a boom. And so their wage rates go up, their products that they were selling us become more expensive, we're having a deflation, and so gold naturally balances all economies on the planet when you have any fixed currency supply. It doesn't have to be gold, it could be Bitcoin or anything else that governments can't expand at will. This could only persist because we left gold. Otherwise, it would have to balance out. And then we've got this supposed surplus here. This didn't actually exist. It's just an accounting lie because if we had a surplus, the national debt would have gone down in these years that we had a federal budget surplus. It didn't. Every one of those years, the deficit increased. So this is semi-accurate accounting. It's not the truth. It's a little bit of a lie, and there are certain times where they make the lie really big and certain times where it's not quite as big. but this was a complete fabrication, just a blatant lie. And then we went into these enormous, this actually started though in the Bush years. So both parties are to blame. I'm completely neutral on this. So part of this is Bush, the rest of this is Obama. It looks like it's coming up here, but one of the things that I worry about is they haven't been able to stop all of this QE, all of this expansion, this hyperinflating the currency, the base currency supply. They haven't been able to stop that, and we are already 4 years into this supposed economic expansion, this supposed recovery that hasn't been a real recovery because of the rates of unemployment and such. We're 4 years into it, and every 4 or 5 years there's a recession. And so if they haven't stopped this yet, what happens the next time there's an economic downturn? They're going to double, triple, quadruple. Instead of making $85 billion a month, they're going to be making 0.8, they're going to be making $850 billion a month. It'll go up 10 times. So this is just going to go off the chart next time there's a recession. Now, so that covers inflation and deflation. It covers this cycle of quality money to quantity currency. We're getting the very fact that you were seeing base currency explode shows that we're getting near the end of that cycle, and it should explode a whole lot further before the end of this thing. So when the next time that they're panicked, you're going to see real hyperinflating of base currency trying to offset the collapse of credit. So where are we in the capitalism to collectivism cycle? Because this is far more important. The loss of freedom is far more important than our wealth. And that's one thing that Ron Paul pointed out to me, and I really thought about for a long time. If you've got wealth and you don't have the freedom to spend it where you want, and you don't have the freedom to protect your own wealth, and the government can take it from you and share it with everybody, then there's no point in having wealth.